Happy Sunday, Tampa Bay. We're with you for another week to talk about the Tampa Bay real estate market here on the Duncan Duo Show. Joined by Mike Yates and Robert Johnson. Mike Yates with Atlantic Bay Mortgage and Robert Johnson, the president of the Duncan Duo team. And I'm Andrew Duncan. And we're going to start the show off today talking about some real estate stats. If you've paid attention to the news at all, there's been some rumblings out there and some fear and concerns about a shift in the market. Are we shifting from a seller's market to a buyer's market? Is the bottom going to fall out of the market? Is our prices going to drop? So there's all kinds of fear and concern out there about what's going on in the real estate market. Most of those, articles or videos that you see are from national websites that are talking about maybe a real estate trend nationally. So we're going to talk to you about some local stats today so you know what's going on in Tampa and in Sarasota. We're going to talk about both Tampa and Sarasota stats today. But I think it's important to understand that real estate is super local. You can have, CNBC can come out with an article saying the market's going to shift, but our statistics may not show that. It may be shifting in New York and California, and maybe that eventually makes it here. But as of right now, we're going to talk about our stats that we're seeing today. And so the very first part of the stats that I like to talk about is the number of home sales and how that compares year over year and then month to month. So in July of 2018 in Tampa, and we're going to focus on Tampa stats first, and then another segment of the show we'll do Sarasota, there were 3,295 sales in July of this year. July of last year, there were 3,144. July of the year prior, 2,946. July of the year prior, 3,059. 3,059. So to me, that doesn't sound like we're seeing a drop in the number of sales yet. The number of sales in July up from last year, pretty consistent. We did see a drop from June to July. So in June, last month, for example, we had 3,591 sales compared to 3,295. But that is consistent every single year. Every year, July's sales are fewer than June's. So that's a consistent trend that we've seen in our market for a really long time. Average sale price for July of 2018 was $276,395, the second highest mark in a decade. Wow. The first highest mark was last month. So we did see a drop off in the average sale price. Last month we saw an average sale price of $286. But compared to last year, we had an average sale price in July of last year of $262. And then so it's $276 this year. So we still see year over year appreciation. And then average homes taking 50 days to sell, 2.6 months of inventory. Again, pretty low inventory. But I think what we've started to see, and again, one other thing to keep in mind, the number of the inventory and days on market obviously increases with price. In our market right now, we're still 3 months and under for everything below $300,000. When you start to go every 100,000 above 300, you see a little bit more inventory. But you don't see 6 months of inventory in our market until you get to 600,000 plus. And 6 months is where below 6 months is really considered a seller's market. Above 6 months is considered a buyer's market. So everything below 600 is still a seller's market. So we haven't seen the shift yet. Are there some things happening now that may be starting a shift? Potentially. It's hard to say. We won't know until months down the line when more stats come out. But it's not obvious from the statistics yet. There's even only 10 months of supply for homes $1 million and above, which is a really low figure that we haven't, usually that number is 15, 16, 20 months above $1 million. So, still relatively low inventory, not quite as low as it maybe was earlier in the summer. But if you look year over year, our stats are still really, really, really strong in Tampa, showing a growing real estate market, more sales, and rising prices. Now, what we've seen at our company, and Robert, you can kind of speak to this, is we have started to see homes maybe take a little bit longer to sell. We have started to see a little bit fewer bidding wars. Some of that seasonal could be explained as seasonal, that you see the lull, but right when school's starting. But it could be potentially, and we'll know after a few months of data, it could be the start of a shift. It could be.
And that's where it's great for us because we have a lot of listings. We do a lot of business with listings, and we can look at a large pool, whereas a normal agent might do a couple a year. So
Right.
we can see stuff on a larger scale. I will tell you that I completely agree. There's a shift. I think people get scared when you say shift because they automatically go back to
What happened
oh
last
my
time?
gosh,
Yeah.
the worst
The
bubble
bottom's
since the
gonna fall out.
1920s.
Right.
Yeah. And that's not really what's happening. I
No.
think what's going to happen is it's going to be more of a balanced market. For a long time, it was a buyer's market because the market had been so bad, buyers could come in and they could get a great deal on a property.
Right.
And then for a while, it's been a seller's market, and a lot of agents haven't worked in a seller's market, or excuse me, haven't worked in anything but this seller's market. A lot of sellers who maybe bought their home 5 years ago, they're kind of used to a seller's market too, because that's all they've really seen over the past couple of years. So it's going to go back to a balanced market, I think, which is great long-term for the market. I think short-term it's going to be a little bit more of an adjustment for some agents to figure out how to work in that atmosphere. But we are seeing less bidding wars. When you look at MLS as a total, there's almost as many price decreases as there are new listings going on the market, which shows you that a lot of people went on the market and are having to lower their price now. We're seeing that on a national level and on a local level. And it's just something where you really, really, really have to educate people that are wanting to sell their property that they cannot overprice their home. The home has to be really move-in ready right now because there's a little more competition. And the number one thing buyers are looking for now, especially millennial buyers, which is the number one buyer pool, even though they haven't bought homes statistically as much as other generations, they're the number one buyer pool. The number one thing they want is a move-in ready home. So, in order to attract them, to still get your house out there, get a lot of looks at it, get a lot of showings, you just have to be a little more strategic, and hopefully your agent can help you with that.
Yeah, and I think that's the key. We're gonna trend towards a stabilized market where it's not gonna end up turning into some massive buyer's market with all these foreclosures, and we're not gonna have all the economic challenges that we had years ago. But affordability has become a concern because prices have risen and rates have risen. But secondarily, you've had this lack of inventory that's kicked a lot of buyers out, so some of them jumped out on the sidelines. But I think I do see inventory increasing a little bit, and more of a leveling off and stabilization than necessarily a major price drops or anything like that. We have too many strong economic indicators in Tampa Bay with how much our population is increasing and how much employment's coming here and how many people are moving here, and because of all of those factors, our real estate market's going to continue to do really, really well, and I think outpace most of the rest of the country, with some of the challenges that they have, but nonetheless, the run up that we've seen with these drastic, appreciation numbers and really high number of sales, I think will tail off some. Not dramatically though. I think it's just going to be it's very slight.
When you look at what new builders are building out there, they are building really, $400,000 and up prices. That's really, really, really what you see out there in our area of stuff that they're building. There's some lower price stuff going on, but not as much. And so people that are really, you talked about inventory earlier, people that are in that higher price range, they have a lot more choices out there, partly because new builders are building those types of properties.
Because there's more margin.
Exactly.
In it.
So
there's way more margin.
When you go under that price, there's a lot less inventory, and there's still a lot more competition. So if you go out there and you have a great property, you have a good price on it, and it's really, really attractive, it's still going to go quickly because the pool of that property is just so small.
So looking at all the data and kind of becoming an economist, so to speak, when we have to talk about this on the radio show and kind of keeping people up to date on what's going on with the stats and how competitive it is in those low price ranges, there's definitely an untapped market right now that I think, savvy developers, if you're out there listening, please call us because we'd love to help you with this. But I'm going to tell you a void in the marketplace of where a lot of that inventory is sitting and how a lot of that inventory can hit the market. But I'm going to talk about it in our next segment. So I'm teasing the next segment. I'm going to hold out on telling you now because it's going to take a few minutes to get to, and then we'll talk about Sarasota stats a little bit later. But there is a segment of the marketplace right now that is completely untapped, And it's a remarkable opportunity. It's something that we saw back in the run up and the boom, and it's just it's non-existent right now. We're seeing so little of it, and I think it's a matter of time before where it's a place we go to find some of that inventory. So talking about the stats again, a couple of other things I wanted to point out about the stats. So when you look at the the price ranges, like I said, you have as prices rise, you have more supply. Homes take longer to sell, and there's a worse saturation rate. The lower the price, the better that is. But interestingly enough, a lot of people look at Tampa and they say, oh, it's a luxury market or it's a second home market. And the reality is Tampa really isn't. You get into Pinellas and things like that, and you can see some of that. But the majority of our home sales happen between $150,000 and $400,000. So if you look, 60+% of our home sales are between that price range. Only 1% of the sales in the entire marketplace is above $1 million. And on the contrary, only 3%, 4% is less than 90,000. So you've got the majority of the home sales in that window of 150,000 to 400,000, probably almost like 70% in reality. 21, 15, yeah, it's about 70%. So a drastic amount of our home sales are in that price range, and so what that means is above that number, there's not as many sales happening. You have more choices. Below that number, you're dealing with mostly investors and homes that need work, so those don't qualify for the average person that wants to buy and finance and move and ready home because it won't fit the conditions. So that the wheelhouse is in that price range, and that's the price range where we see the inventory challenges. So we talked about the market having 2.6 months of inventory. Some of the price ranges within that have 1.3, 1.6, 1.8 months of inventory in that price range. So again, still super, super competitive, still bidding wars happening, still light inventory, not as much as it was maybe a month or two ago, but the stats still show it. It'll be really intriguing to see the August and September stats to see how that's going. I know our company is outperforming where we were this time last year. We're up about, in terms of pending sales, we have about 30+% more pending sales right now than we did at this exact same time last year. So that's likely setting our company up for a stronger end of the year than last year. But I don't know if that's the case at every company out there. So we're going to be back. We're going to talk, like I said in the segment, about the untapped market right now, the next market of the moment. If you're a real estate investor or a first-time home buyer, you need to get with us on this, and you need to pay attention through the break here and come back to us on the other side here on the Duncan Duo Show.